Good morning, everyone. Today we'll be talking about how to day trade, making $500 a day using leverage 3x ETFs. So I'll be going over the 3x leverage ETFs that I like to trade, as well as the account sizes difference that obviously be making more than $500 or less, depending on your account size, as well as I will be talking about how to utilize increasing your account size and how to go from there. And let's take a look. So for QQQ is one of my favorite ETFs to trade. So I like to trade the leverage ones. So if QQQ goes up, let's say, let's take a look at this Friday, goes up 1.54% on June 30th. TQQQ, which is the 3x long side leverage ETF for QQQ, will be going up 3 times that. So 1.54 times by 3 is roughly 4.1%. So you can see on that day right here, we are up 4.1%. And same thing for the short side. If for SQQQ, that day would have been down 4.5%, roughly over here. So yeah, so depending on if you're going long or short, I would add you just have to buy TQQ if you're going long, and you have to buy SQQQ if you're going short. And if QQQ goes down, you make money. If you're in SQQQ, obviously you can see just on Friday, you're up 1% when QQQ was down 0.33%. So you just times it by 3. And the reason it's better for that versus shorting QQQ is you can only make 100% shorting QQQ, right? If QQQ goes to 0, your whole entire gain is 100%. But SQQQ can go over 100%. You can see just from this big drop from August 2022, it was up 108% in just from August to October. And that was QQQ's drop from here, August to October, 22% down. And you can see leverage 3x ETFs is up over 100% because it multiplies every time it goes up, right? Every time it goes up, it's going up by 3x. So the more it goes up, the more it's trending your way, it's going to be more than 3x because it compounds. Your money compounds. So even though we're only down 23%, SQQQ was up over 108 because every time it goes down, your money compounds and compounds 3x before, and that's why it's very good when it's going for you. Obviously, it's very bad when it's going against you. So that's why you have to set tight stop losses for these. So how do I scalp trade? So let's say we just take a look at the most recent chart to see if any setups to potentially get in the stock. Let's see here. So Thursday had a really good setup here. So this is the 15-minute chart on QQQ. We don't want to chart the 3x leverage ETFs. When we trade the 3x leverage ETFs, we want to chart the original ETF because the 3x messes up the chart due to it being more, what is it? So when it goes down 3x, right? You know how your stock goes down 50%. You need 100% to get back its gains, right? So that is what the leverage ETF does. If it goes down 3x, it's going to skew the data because you need more than 3x to be coming back to break even. So if QQQ goes down 1% and it goes back at 1%, it's the exact same spot. But if the leverage ETF goes down 3%, it needs more than 3% to be back at the exact same spot, right? So leverage ETFs. All right, so QQQ here on Thursday, right at this support, you can see this 364. What I would do is, as a day trader, obviously you want to set your stop losses tight and looking for setups. So you can see this 364 support is a strong support resistance back here. So back here, we just cannot get over this resistance over and over. And when we do get over it, it acts as a support. See, we bounce off of it. So that's the top of the next structure for the bears to need to break that structure. If they don't break that structure, we know QQQ is going to bounce. You can just go to the hourly chart. You can see how much volume was traded in that structure. So when we come down to it, right here on Thursday, right? We had a big drop from the bears, right? It looked like if you were trading on Thursday morning, it looked like we were gonna head down to market was like gonna crash, right? Especially in the morning, and it was a waterfall for 3 hours, and we bounced out. And what would you do if you're obviously hindsight 2020 is easy, but you can see we touched exactly that 364, bounced off of it initially, right? And rejected from the prior resistance, this 365. And we retest it. So this is where I would start to get in, right? We came back down here, didn't make a new low, right? Realistically, if the bears were serious, we were to have retested the 364 again. And if they were even more serious, then we would have broken that, right? But didn't make a new low. So that was the first initial sign for me that potentially the bears are not serious about this, right? So you can either get in on the 5-minute time frame where you see this move where we break the prior candle's high. So on this drop, we didn't make a new low. And then you would add once we broke above right there, this prior candle's high. So this 5-minute candle, when we started the green candle, so this would be 364.6. If you broke above that high, you add right there, put your stop loss at the low of the day or below this pivot, and then you just ride it. Retested, rejected slightly, broke above, and then there's just no more red flags. You can see it was just a 5-minute trending day, nothing to red flags for you to get out. Some of us would have gotten out here when we broke that 12 EMA. You can see we're trending the 12 EMA here, but it was only a quick drop. So some of you would have just put your stop loss over below the 12 EMA. As it trends up, you can move your stop loss up. And so if you did stop out 0.5%, so that would be a 1.5% gain on your leverage ETFs. If you held it to the end of the day, you would have been up 0.76. So that would be times by 3. You'd be up roughly 2.1%. And you could have possibly swinged it because we closed at the height of the day. So if you swung it, swing traded for a short term, to the next day, you would have been up 1.5%. So that would be up 4.5% on TQQ because you times that by 3. So that's how usually I would scalp trade it. And so depending on account size, so if you have a $10,000 account size, 4.5% is roughly $450. But if you have a bigger account size, I recommend you at least have 25,000 for day trading because otherwise you'll be have that day trading restriction rule where you only have a couple trades for the day. So that's so 25,000 if you have times that by 4.5%. That is roughly over 800 and let me see here. That's close to let's see, 2,500 times by 0.5. That is $1,100 and $25. So that's quite a bit. Obviously, that you got to put your whole account in there, so to make that kind of money. But so that's how usually I would scalp trade. Even if you didn't get in Thursday, right? Let's take a look at just the Friday chart itself. Friday, QQQ, low of the pre-market right there. Retested again on, what is it? Right when market opened, right? Double bottom. You're still patient. You don't want to get in right away because there's no trend change. Then we broke the low of the day, which coincides with the low of the pre-market when we opened. Bears didn't have no follow through on there. You can see this was a big enough drop where the next drop should have favored the bears to confirm a downtrend. They couldn't. So that is also again initial red flag for me from the bears not being serious, just like this one here, the low of the day. Then you get a bounce, right? You're still patient. Add on this next candle where it breaks above the prior one, and you step your stop loss, obviously, at the low of the day. And you write it up all the way up, and you stop out right there when it broke the 5-minute 12 EMA, the teal looking line. Your profit from there. So 0.9%, so a decent 3% gain. And even if you set your stop loss at the prior pivots, so some of us like to set stop loss on pivots. So this is a move up, that's the pivot. Move up, you can see that's the pivot right there. Get a higher low right there, move up, and that was the next pivot that was supposed to be going up. But so you would have been stopped out close to over here if you set it on the prior pivot. So that would still be a decent gain, right? Still be a 0.5%. So on TQQQ, it would be a 3x. Usually I like to go on the long side because, especially for QQQ, because market is up 70% of the time. So why would you want to go against the statistics, right? Obviously, last year when we were in a bear market, you would be trading SQQQ more than TQQ. You would be trading on the short side because in bear markets, obviously, the statistics is favoring the short side. But and when we're back in the bull market, as well as throughout history, market is always up 70% of the time, including the bear markets, right? These data include bear market and bull markets combined together. Market is still up over 70% of the time. So statistics is favoring your way when you are trading on the long side. So usually I would like to trade TQQQ more than SQQQ, unless it was like we're in a bear market, obviously. So last year, SQQQ was very favorable. So if you like to be more conservative, you don't want to such a big, more volatile, because sometimes QQQ can be down 3% or 2% in one single day, right? I don't think we have that yet for a while. We haven't been this volatile. But if you just look back, back just last year here, you can see on some days QQQ was down 3.4%, right? You would have been down over 10% in one single day. That would have been a great day trade for a short side, and you can just hold it 10%, right? If you had $25,000 in your account, you would have made $2.5 grand just from that day. Obviously, if you're on the wrong side, you would have lost $2.5 grand just in one day as well. So you gotta be careful on these leverage ETFs to set your stop loss around your pivots and take profits as well. But it's very good to utilize these tools because, especially, it's so easy to get in and out of these. You don't need to have like a margin account, right? You don't need a margin account to get the direct leverage ETFs. You just buy the shares, and it will move 3%, 3x the QQQ itself. So that's why it's very good to utilize these 3x leverages. And so if you like something more conservative, you would trade SPY 3x leverage ETF because SPY moves a lot less. You can see how less volatile it is. Its move is usually within 1% to because they have so many sectors in it, right? QQ is only mostly tech sector, and SPY has like healthcare and financials and utilities, consumer discretionaries, retail, right? So it doesn't move as much because of different sectors holding it together. Right? Sometimes it may be the financial sector dropping, but the utility sector may be up, right? So that's why it's not less volatile. You can see all these. Sometimes it only moves 0.3%, 0.8%. So if you're just starting out and you're just testing the waters for 3x leverage ETFs, I would recommend you trade SPY. So for the long side, for long side is this one. For long side would be SPXL. So that's a 3x long side for leverage ETFs. You can see, and for the short side, SPXS. Short side would be S, right? And long side would be L. That would be SPY. So if you are wanting to trade the leverage ETFs on steroids, and you just like to be taking a big risk, I would go for the semiconductor sector, which is like trading QQQ on steroids, because the semi sector is usually moves or lead QQQ sector, but in a much more substantial percentage. You can see just this day it was up 6.45% when Nvidia had its earnings there. As well, you can see these moves, just these couple of days of move, a lot more volatile, 2.5%, right? And 3% move up, 1.4%, 2.4% down, right? 3.4% up, while QQQ was usually within 1.7%. So the semi-sector usually moves twice as much. So if a semi-sector moves twice as much, it's 3x, and then you times it by 3x leverage, right? You're getting like 10% moves within day, just each day, right? 10% move right here on Tuesday. You can see another 4% move, 6% drop. So this is like trading QQQ on steroids. So if you like even something that's more volatile, I recommend the semiconductor sector, which is SOXX. So SMH is also the semiconductor sector, but the leverage ETF one tracks SOXX. So on the long side, SOXL, short side, SOXS. So same thing, you want to lean on playing the long side because same thing as buying QQQ, the semi sector goes up in the long run, of course. You can see it's up 330% from that October low for the leverage ETFs. So even just from January, we're up 200%. And if you guys want to trade something in the Chinese sector, FXI, which is the tracking the FTSE 50, which is China, the largest 50 companies in Hong Kong. So right now I'm seeing a wedge. You can see support, support, support. So I've taken a small position here, right there, to add to see if this is going to give us the weekly higher low and change the trend to back to weekly uptrend. It's pretty risky because think how many gaps this thing has, but this is like is even more on in the semiconductor sector due to how volatile this thing is and how many gaps it is. And this thing is still in a bear market, so I wouldn't recommend it. But so the leverage ETF alongside is YINN. So I've gone into YINN a little bit down here, just on Friday's low, close to here. So we'll see how it goes. I'm up a little bit already, but I want to see it form a weekly uptrend. Right now, we don't have you didn't have a weekly uptrend. Everything is still in a bear market. But I like how this big enough bounce here. So we potentially set the monthly higher low. We need this weekly trend change right here. See, big bounce, like this big bounce on the weekly, and this needs to be the pivot set for weekly trend change of this prior higher be 3.5 high for it to change. And short side, so obviously Yang, this is the short side. So you can see the Chinese stocks have been on a bear market for a very long time. So you can see how much during this move was when we were in a bear market. When it went up, Chinese stocks went down. This went up 300%. Yeah. So yeah, depending on your trading style, see which one you want to do. But if your account size is less than $10,000, I would suggest getting a part-time job while trading, so you would increase your account size much easier. Because let's just say you make 100%, right? You did really well. You made 100%, right? $10,000, 100% is only 10K. But a minimum wage job would be able to give you at least 35,000, right? And it's not nobody makes 350% every year on trading consistently. It's not that easy. If you do, let me know. I'll love to know how you guys make 350% consistently every year. So yeah, that's why I recommend getting a part-time job while trading, so you can increase your capitals much faster. And when you have a larger account size, you don't have to take larger risk where you can be down 20% a day or something. Those kind of risk. Let's say you have if you have 100 grand, you only need 1% to make 1K a day, right? And to scalp 1% a day on leverage ETF is really a lot easier than trying to pull 0.33% on QQQ to get to 1% on TQQQ. Right. All right. That's all I got for you guys today. If you guys got any questions, feel free to comment below. And let me know if you like these kind of videos. Feel free to subscribe since you made it this far. And I will see you guys tomorrow for the market update on Monday. Have a great rest of you guys' weekend.